Hi there, welcome. This is Her Investing Coffee Talk. I am Jessica Perrone, and I come to you guys every week to talk about the markets and kind of making it approachable for all the ladies. And what a fun week it's been at Her Financial IQ. The positivity has been amazing, and so has the feedback. This week alone, we had two free events. The first one was our How to Talk Investing with Your Teen workshop that we had. Now, it was in these types of workshops, we talk about all sorts of different concepts, but in this one in particular, we're talking about how to speak investing to your teen who may be interested in investing, but you might not know the language to actually speak it to them. So if you are interested, I do have the recording for this workshop. If you're interested, you can totally DM me or message me or whatever it is. Go through my website at HerFinIQ and then just message me and I'll send you the link for how to watch that recording. Another big thank you for the National Council of Jewish Women Pittsburgh, their Center for Women. They hosted our Investing Sense for beginners, and that recording can also be found on their website. And that would be the ncjwpghevents.org. Again, you can request this link from me, and these are all recordings. And you can access them free and start practicing your investing language. So I'm Jessica Perrone. I am the founder of Her Financial IQ. And a little bit about me. Well, I left finance about 3 years ago. I had a 17-year career, and I left it to stay at home with the kids. I did, and I kept trading and I kept investing. But what I couldn't believe was the barriers that women put up when it came to investing, finance, or even talking about money. And at first I was like, oh, I'm going to teach women how to trade, and then all those friends of mine are like, oh no, I don't have a finance background. I can't do that. So I was like, there's barriers here. There's a lot of fear. And so what I realized I needed to do was create a curriculum that started with the basics of the language of investing, the very, very basics, so that I can encourage and cultivate confidence in women that they can learn about investing and it's not hard. And you know what? I even make it fun. Yes, I make investing and learning about investing fun. That is my goal, both in the classes and in my broadcasts. And every week I have this ladies investing coffee talk. And what I'm trying to do is just take concepts that I see from around me and then make them approachable to ladies and teens. So to let you know, in January, I do have all my classes starting again, my teen girl classes and my ladies classes. You can check out my course offerings at HerFinIQ.com. And if you have any questions about where your journey starts, there's two ways you can go about that. You can either message me and we'll talk about it, or I have the HerFinIQ. Yes, HerFinIQ IQ test. Yes, it's a very like Cosmo style quiz. And you can see how your investing knowledge stacks up and also which class may be appropriate for you. So now, but it's not January yet. It's not even Christmas yet. We have a week until Christmas. And how many of you have done your Christmas shopping already? How many have done all that? Are you all done? Are you one of those go-getters that have gotten everything done, or are you kind of like me? And I've been having a really hard time. I've been having a really hard time getting my Christmas shopping done. And I actually started thinking about this. I started thinking about this because I saw a headline from this week, and it was actually the November advanced retail sales headline. Now, some of you might be like, what the heck is that, right? Well, basically the government puts out numbers, okay? They do a big study every single month to see how retail sales are doing in the US, okay? So a headline like this would read something of this nature. And I actually got this headline from Trade the News. I subscribe to a lot of financial news services out there because I am a financial news junkie. I really am. But that's how I identify opportunities too. I have a lot, yes. So I do a lot of reading every single day. But anyhow, so we have this headline. This is how a typical November advanced retail sales headline would read. So it goes November advanced retail sales month over month, 0.3% versus 0.8% estimates. So basically, your actual number was less than in estimates. Okay, so to the street, they're like, "Ooh, this isn't necessarily good." The sales have actually gone down month over month. Now, just keep in mind, these are the numbers for November. They report the month after because they're aggregating all this information. So in December, they're reporting the information from November. Now, what happens from that headline is that all these Wall Street firms and all the financial news, they take this headline and they start analyzing it. And this is why I like to read so much, because there's so many opinions on how to read these headlines. So here's two takes on this headline. So the first one reads like this: November retail sales data disappointed, but the strong October reading was revised higher, suggesting consumers did indeed heed supply warnings by getting out early to do their holiday shopping. So basically what they're saying here is that, do you guys remember way back in October when Amazon was like, hey, get your orders in early. There's going to be the supply chain bottlenecks and you want to make sure you get your orders in on time. Well, that was all over the media way back in October. And so what this Wall Street firm is saying that the shoppers did all their shopping in October, and therefore November was softer. Okay, I'll buy that. I'll think about that a little bit. So now we have another take on this. So listen to how this financial outlet explains this headline. Surprise, inflation is bad. Okay, this is interesting. And they go on to say, you probably don't need to hear this from us if you've set foot in a grocery store, shopped for clothes online, or paid for home renovations in the last few months, right? We've all noticed that prices have been higher. I think if you don't, there's the camera thing. If you don't, just let me know. But I've noticed it. I've noticed it myself. Okay, so to go on here. However, the impact of high inflation has seldom been clear as it was in today's retail sales report. Retail sales rose slower than expected in November, only growing 0.3% month over month. Economists expected 8% in the month. So we would call this a major miss. Okay, so that's exactly how I explain this to you. Basically, if the month over month estimate is missed, then Wall Street says, "Ooh, that wasn't a good number," right? But really what it's saying is that the consumer is not consuming as much. People are not going out and they're not going to go out as much. Okay. So this retail sales report, this retail trade report is what Wall Street calls an economic indicator. Yes, you're going to feel so smart after this, right? So there's all sorts of economic indicators out there that the street follows. But the advanced monthly retail trade report talks about the consumer and spending, which is something that you and I, as women and as moms, know an awful lot about, right? But it can also kind of help you kind of do an internal check. If you notice certain trends at different stores, you can always go here to see if your hunch is correct. Isn't that interesting? But anyhow, so let's talk a little bit about what an economic indicator is, okay? Because I want you to leave here not only entertained, but educated as well. And wouldn't it be cool for you to say, yeah, I just added this vocabulary word to my vocabulary. So an economic indicator is a piece of economic data, usually a macroeconomic scale, that is used by analysts to interpret current or future investment possibilities. These indicators also help to judge the overall health of an economy. So there's two really widely followed statistics that show the health of America's spending. The first one was what we were talking about, the advanced retail sales. And another one's called same store sales. So if you start hearing these words in the financial outlets, you know what they are. You know what they are. It's basically gauging the health of how we are spending as consumers. Okay? Pretty, not too hard, right? So after seeing these headlines, I went to myself. I said, okay, I'm gonna think about this a little bit. I'm gonna think about how the street analyzed these headlines, and I'm gonna do an internal check as a consumer myself. Okay, so the first part is, yeah, I didn't spend a lot in November. I did not. Okay, I had. And I also didn't spend a lot in December yet, though I kind of plan to. I hope, I think, but we'll talk about why I haven't spent as much. And I did this analysis. I thought about it in my own head. So I am really behind in Christmas shopping, and I didn't spend in November for a couple of reasons. But one of it was that it was Thanksgiving. It was Thanksgiving last month. And I went home. I went home and hung out with my family. I traveled, and I wasn't shopping. I was hanging out, playing board games for family night, and eating very heavily. Yeah, I ate a lot over Thanksgiving, and being jolly and just being happy to be with family. So so that was one of the reasons why I didn't spend. Wait, there we go. That was one of the reasons why I didn't spend so much in November. The second thing was because, you know what? Since the kids have gone back to school, I have spent so much money on clothes for them. I mean, they grew in the last year. And I've spent money on school clothes, on school shoes. You know, when they were in quarantine and at home, you know, they just sat in their PJs all day. I didn't have to get stylish clothes for them or have to worry about the current trends or whatnot, or makeup or any of those things. And over August, September, and October, I spent so much money on these girls. And guess what? Like right now, I'm like, they don't really need anything, because in that time prepping for school, I spent so much money on things for them. So I was like, they already have what they need. And I'm actually stumped as to what to get my kids. So if you think about it, maybe a lot of consumers consume so much once we were able to get out of the house, right? We had been cooped up. We hadn't been able to go out. We didn't feel safe to go out. And then, you know, beautiful weather, we're going out and we're shopping like banshees, right? But now we're like, oh, you know, what else can I buy? You know, what else can I buy for these kids? So they have everything they need. Okie dokie. So that was another reason why I haven't been shopping as much, as that I don't know what to get them. I don't know what to get them for Christmas. And if you have any suggestions, please feel free to message in. 3 teenage girls. Yeah, 3 teenage girls. I know, feel sorry for me. But, you know, it is what it is. They're good girls. They are. They're really good girls. Okay. So another reason why I haven't been spending much money is that when there is volatilities in the market's been very volatile in the last month. There's been up high highs and low lows, and there's been a lot of volatility. It's been selling off and going up, selling off, selling off, selling off. And when you have this type of volatility, you know, I am cautious about spending. And I think a lot of people out there, when they see their investment accounts down, they're feeling a little cautious about spending too. They're like, oh, maybe I'm gonna save my money a little bit. I personally also, when the markets go down, I want a little bit more cash on hand so that I can put it into the markets actually when I feel that we're at lows. So that's another reason why I like to have cash on hand when the markets are selling off. So I might not spend as much because I want to have much more cash. And also with the Omicron variant out there, who knows what's going to happen, right? And with uncertainty, yes, I want to have more cash on hand as well for like emergencies or whatnot, you know? So that's another reason why maybe, you know, other people are feeling the same way as me about just, you know, pulling back the spending just a little bit here as the market volatility and the new variant, you know, kind of plays out a little bit. And then the last bullet point I was thinking about is that I honestly I spent a lot of money on stuff. There is really nothing else I need. for the family. There's nothing else I really need. And I'm one of those people, I don't just spend money to spend money. It has to be something that I really want or I really need. And you know what I really want? I really want to travel. I really want to go to events. I want to get out of the house. Frankly, I'm just shopped out. I don't want to shop anymore. So what I did instead of buying stuff was, I spent money on a trip over, in February over President's Day weekend. So I got a trip for the kids and I. And then, I also got tickets to a couple events for a Christmas present as opposed to things. So, hey, you know what came to mind when I came to that last idea? I just identified through my consuming something called sector rotation. And it's something that we see and we hear about on Wall Street quite frequently. So what is a sector? Well, there's 11 sectors of the stock market. So every company that is publicly traded belongs to a sector. And these are the stock market sectors. They are energy, materials, industrials, utilities, healthcare, financials, consumer discretionary, consumer staples, information technology, communication, and retail. So every single company out there belongs to these sectors. And within the sectors, there is something that we call industry groups. Okay. Now, in my Investing 2 classes, we actually go through every single industry group and every single sector here so that you can familiarize yourself with the industry groups and different stocks that are in there. Because one of the biggest challenges when you start trading is what to invest in, right? What do we invest in? Well, number one rule is to invest in things you believe in, right? But women in general, when they are looking at things they believe in, they will focus on consumer products because we are the super consumers of the household. But what you need to also do, which is rule number 2, is be diversified. And to be diversified, you need to have stocks in all 11 sectors, or not all in one sector, depending on how much capital you have to invest. So with that said, within the classes, we identify the different sectors that you may be familiar with, but just don't come to mind. Okay, so now that we talked about sectors, we can go back to the sector rotation. So, for example, when I said I am sick of shopping and I want to spend money on airline tickets or a show for my kids. Okay, a concert for my kids. Okay, so what does that mean? So when I bought tickets to a concert instead of buying blue jeans, right? So for example, we'll talk about like Levi's blue jeans, Levi, right? And I was going from consumer discretionary. So Levi's is consumer discretionary. And consumer discretionary is something that is a nice to have. It's something that you buy that is a nice to have. Whereas consumer staples is something that you must have. It is one of those things that are the last items to leave the household that you will, let me back up. It's one of the last things that you will spend money on if money is tight. It's the need to haves in the household. So when you think about the need to haves in the household, we're talking about toilet paper. Toilet paper, right? We are talking about cleaning supplies. We are talking about the things, we're talking about food. We're talking about the things that we must have. We must have in the house to actually get by on a day-to-day basis. Okay. Consumer discretionary are the things that we buy that we don't necessarily need, but that we want. Okay. So moving on. Hopefully you're following me here. So when I went from buying blue jeans, right? When I went from buying blue jeans, Levi, to consumer, I went from consumer discretionary to communication, right? Because For example, Live Nation Entertainment, which is the company that puts on a lot of these concerts, and their ticker is LYV. So that is a communication sector company. And that was a sector rotation. I went from buying one product to buying another one. Okay, so here's another one. So I went from buying furniture. Yeah, I probably should buy some furniture, but I'm not that type of gal. But I say you stop buying furniture, right? So for example, Wayfair or their ticker is W. And I went to buying an airline ticket for my trip. So that would be, for example, United, right? United is our airline, and airlines are in the industrial sector. So I went from buying things, household goods, to wanting to go on a trip and spending money on tickets. Now, just keep in mind though, like hotels, restaurant, leisure, that industry group is still in consumer discretionary. So you do have to kind of keep an eye out for these items. But for example's sake, Wall Street is like this too. You just made a cognitive decision that you're no longer going to buy this product anymore, and you're going to go to this one over here, right? So Wall Street is just like that too. Depending on what is happening in the news or how expensive certain sectors are, and when certain sectors are too expensive, like the stocks have been bid up and they're really super expensive, that's called overvalued. Okay, so when this happens, Wall Street firms will actually take profits from an upsector and put it towards an undersector that might be undervalued. Okay, so that is considered sector rotation. That's one example of sector rotation, taking profits from one and then putting them in another sector that might be a little bit undervalued. There is also sector rotation, though, out of fear. And this is something that we've seen in the last month. So, for example, if the markets are selling off, or if there is uncertainty, like there has been in the last month, they will put allocations, allocations toward safe stocks. Okay. And this is known on the street as defensive stocks. So when you hear that fancy word defensive stocks, it's actually safe stocks. And what do you think safe stocks are? Or these defensive stocks? What do you think they are? Anybody? Well, they are the last things that you cut out of your budget. And what did we talk about earlier? We talked about consumer staples. These are the must-haves, not the nice to have. So, for example, I saw this headline in the last week, and this is what this headline means. Consumer staple ETF hits all-time trading high as investors support defensive stocks. Okay, ladies, now you understand this headline, right? You understand this headline. Consumer staples ETF. So actually, no, I got to back up a little bit here. I got to explain what an ETF is. An ETF is basically a basket of stocks, right? And a consumer staples ETF is a basket of consumer staple stocks. Okay. So what they're saying here is, right, over the last week, because there was so much volatility after the last month, because there was so much volatility, Wall Street was putting money into consumer staple stocks. So let's talk about consumer staples a little bit more, okay? So what are consumer staple companies? So the way I came up with these items, and for the most part, when it comes to stocks here, if you hear a stock that I'm talking about, I invite you to put it onto your identifying investments worksheet. Now, this worksheet can be found on my link tree, and you just download it, and it's a way for you to build the companies that you believe in. So if you hear a company that I speak and you're like, oh, I use that product, I like that product, I like that company, then you add it to your list. And this is the list that you start investigating, and you start watching on a regular basis, and you get to know everything about these companies. And when you get to know everything about these companies, so you watch the stock price, you watch the news flow, then you are able to see opportunities. Now, this identifying investment watch list will turn into your focus list. And focus lists are used by companies all over Wall Street. So your hedge fund uses them, your traders use them. It is the list of stocks that you are familiar with intimately, inside and out. And that's what this sheet is going to do. This sheet is going to help you start your own focus list. Awesome, right? So moving back, what are some consumer staple companies? Well, these are the different industry groups. So we have beverages, we have food and staple retailing, we have food products, we have tobacco, we have household products, and we have personal products. So what I did was I did a quick search by market cap. So I was looking for which ones are the biggest companies that you guys would recognize. And I just grabbed a couple. There's no rhyme or reason. I just wanted to make sure that there was something that you guys identified. So for beverages, you have companies, this is pretty self-explanatory. You have like Coca-Cola, that ticker is COKE, and then you have Anheuser-Busch, you have BUD. So those are your beverage companies, right? That's pretty simple. And then you have food and staples retailing. So you have like Costco. Costco would be a food retailing, that's COST. And Rite RAD would also be a food and staples retailing company as well. Okay, this I think you can follow that, right? That's a pretty easy concept. Okay, so now we go over to food products. So we have Kraft Heinz, that's KHC, and we have General Mills GIS. Also under consumer staples is tobacco. That's Philip Morris, PM, and Altria Group, which is MO. We have household products. Procter & Gamble, PG, and Colgate, Palmolive, CL, right? So yeah, this makes sense. Toothpaste, dish soap. Yeah, these are all things that you need, If I have to choose between going out and getting a new pair of shoes or getting dish soap, I'm going to choose dish soap. I'm going to do that. I'm going to choose toilet paper. So it's the must-haves. It's the must-haves. Though the tobacco, I'm not sure if it still belongs underneath there. But, well, who am I to change the Wall Street industry groups? Okay, so moving on. Then we also have personal products. And that would be Unilever, UL, and Estee Lauder. Okay, so don't you feel smarter already? That wasn't too hard to understand. You are now understanding what the consumer staples sector is. Don't you feel so proud? I'm so proud of you. I'm so proud of you. And hopefully I explained it so you guys are understanding it. Yeah, I hope so. I hope so. But, and I want to hear from you. Tell me how I'm doing. I love talking about this stuff, and I'm trying to make it approachable and easy to understand and fun. And let me know how I'm doing. I want to hear from you. So DM me, email me, all that stuff. Yeah, just reach out. I want to hear from you. I think it would be great to hear what you think. So now, if there is uncertainty and if Wall Street is looking for defensive stocks. Now, this is going to be a tough one. This is for those overachievers. This is the challenge question. This is for the overachievers in the audience. There is another sector that is considered defensive and a must-have in the household. So I'm going to go through these sectors and maybe you guys can identify the other one that I'm thinking of. So again, the 11 stock market sectors are energy, materials, industrials, utilities, healthcare, financials, consumer discretionary. We talked about that. So we know that consumer staples, we already talked about that one. Information technology, communication, and real estate. Can any of you guess which is the other one here that is the last thing to be cut from your budget when money is tight? Well, how about utilities? Yeah, how about utilities? You're not going to turn off your water. You're not going to turn off your electric. You're not going to turn off the heat to your house, right? And those are items that sometimes you will choose over consumer staples. Yeah, sometimes you'll choose those over consumer staples. So that would be another sector. Okay, so we're talking about market volatility, and today was another volatile day in the markets. We opened lower and then went higher. I mean, another crazy day in the markets. Traders love volatility; they love these moves. But long-term investors, this can drive some long-term investors batty. This type of market moves. So what I did was I created a sanity checklist. Okay, so basically, if there is a sell-off, right, and you're going, oh my gosh, I can't believe this. What I did was I created a checklist so that you can, in your mind, say, go through your investments and say, and get through and say, no, I'm okay. I can get through this. And this is the checklist. Okay. And even this is how I approach it too, because there are times that I doubt myself in my investing decisions. Yes, frequently. Like last couple of weeks, I was like, oh, did I make the right choice? And, it worked out fine. And I was right in my decisions. But every once in a while, I do doubt myself. And this is actually my own checklist that I go through too. This is the sort of the mental processing I go through. So I can say, you know what, Jessica, you did good. You did good here. Okay, so the first thing is, have cash on the side, have your emergency fund. So make sure your investing money is just your investing money and you don't need to have access to that. So if you have an emergency fund or if you have cash on the side, you can always go to that fund first. You can always take money out if you need to in an emergency. And then you can say, you know what, the market comes back. I'm leaving it in that, I'm leaving my other monies in the investment account. I do not need access to it. I'm just gonna not look at it. I'm not gonna look at it for a couple of weeks. So that's the first thing that you can do to help weather out, a downturn in the markets. The markets historically have come back. They have come back. And we saw that during COVID when we had that huge sell-off, the markets came back, right? But if you did not have the emergency fund to go to, and say you went to quarantine, maybe you had to have access to monies. If you had to go to your investment account and take out money, yes, you had to take it out at a loss. Yes. But if you have an emergency fund, you can go there and leave the monies in the market and allow it to come back. So that's the number one tip, is to have cash on the side. Number two is invest in stocks you believe in. If you invest in stocks that you believe in, even in the downturn, you can take a temperature check. You can say, you know what? I love this stock. I use this stock. I believe in this stock, and I'm in this stock for a long time. I'm investing in it for the long term because I believe in it. Then you are more likely to weather a downturn because you believe in that stock. You can say, you know what? It's going to come back because it's something and a company and a product that I believe in. Another trick is, if you do not like volatility, you should probably be in low volatility stocks. And these are stocks that don't have big changes in price. They don't move around a lot. And last week, we actually talked about how to identify low volatility stocks that don't move around a lot when it comes to volatility. Maybe they only move $1, maybe they move $5, maybe they move $10. I mean, stocks have some stocks that are super volatile. And we even talked about some of the tech stocks will have $100 moves. And if you do not like volatility, and if you do not like to see your account down by that much, then it's better to be in low volatile stocks. Okay, so Facebook, last week's broadcast, you can check that out again to identify low volatility stocks. Now, another trick is to invest in dividend stocks. Okay, so dividend stocks, so stocks that provide dividends, and they can provide dividends on monthly basis, on quarterly basis, on yearly basis, okay, where you get paid as the stock owner for holding that stock. Yes, you get a dividend. Okay. And what's nice about these dividends is that you're seeing monies come in even in down markets. So should the stock price be off a little bit, you're still getting paid. You're getting paid to hold the stock until your investment comes back, until the stock price comes back. Okay? Which is really helpful when it comes to peace of mind. Okay? And then a last trick is when there is a sell-off, a market sell-off, and especially an overall market sell-off, because the smart money is going to dividend stocks in sell-offs as well. But what I will do is I will go through my list, my personal watch lists and focus lists. Okay. I have about 200 stocks that I watch on a daily basis. And what I love to do is in my layout, I actually have dividends in it. And what I'll do is I'll actually filter that list to see the highest providing dividends. And in that list, I will look to see which ones are trading near 52-week lows. And that way you can pick up dividend stocks, right, for discount prices. So it's almost like going to the sales rack at your favorite store, right, for those brands that maybe you couldn't necessarily afford, but every once in a while you can find one for the price that fits, right? Yes. And that's what, when the markets sell off, is typically a really good trick. You go through your list, the stocks that you believe in, you filter by dividends, and the ones that are the highest dividend providers, you can pick up more for at a discounted price. Yeah, so that's a little trick that I do in down markets as well. So with that said, I hope you guys enjoyed today's chat. I do. We talked about some stuff, and I hope that you feel smarter. Mainly, we talked about the consumer today. We talked about economic indicators, right? Don't you feel a little smarter about that? We talked about taking the temperature, taking your own personal temperature of how you feel about certain subjects and seeing how that can translate to market trends. So that was another thing that we talked about today. We also talked about sector rotation. So if you hear about that on the financial outlets, if your financial advisor is talking about it, or even if the guys are talking about it, at these holiday parties, you can be like, I know what that sector rotation is. That's where you stop buying from one sector and you move on to another sector, right? And we identified that even as consumers, we'll go through that process. We saw that maybe I'm not buying furniture anymore and I'm buying airline tickets. I'm not buying jeans anymore. I'm buying concert tickets, right? My focus has changed on what I am purchasing, and therefore my sectors have changed as well as a consumer. And then we also talked about stock market sectors, the 11 stock market sectors, and then we talked about consumer staples. So I'm just so proud that you even stuck in there with me, because this stuff is scary to women. But you know what? It does not have to be. And I hope you will continue to tune in with me on a weekly basis. And if you'd like to learn more about what I'm teaching, check out HerFinIQ.com. That's where my class lists are. The new sessions start in January, and doesn't matter if you join me for classes, if you join me for my weekly coffee talk, or even my free workshops that are offered through all different kinds of organizations out there. Just start practicing the language, and you'll make me a happy Chiquita. That's for sure. Because what I'm doing here is I want to make investing approachable to the ladies. Hey, so I'm Jessica Perrone, founder of HerFinIQ. This was the Her Investing Coffee Talk, and may the markets be in your favor. Have a great day. Have a great weekend. And I'll see you in 2 weeks. I'll see you in the new year. Bye now.